Welcome, Mr. Denis O'Brien. Mr. O'Brien is no stranger to this region. He's an Irish entrepreneur, and he may not remember me, but I met him donkey years ago, as we say in the Caribbean, when he first came to Jamaica up on the North Coast. And since then, of course, he's become a household name. He's founded several companies. He's a philanthropist who is deeply involved with global humanitarian issues. Of course, he's the chairman of the Digicel group, and he's going to share his thoughts with us on the regulatory innovations for a single Caribbean ICT space digital economy. Welcome, Mr. O'Brien.
Thank you very, very much. It's a pleasure to see you again after so many years. And you're wearing my favorite color.
Oh,
which is
wonderful.
Great.
I thought it would be green. I thought it would be the luck of the Irish.
So good afternoon, honorable ministers, ladies and gentlemen. It is an honor to join you today, and I'd like to thank you all, and particularly the CTU, for the opportunity to address this important meeting. The CTU ICT Week is a very important part of the regulatory calendar, and we've had some very fruitful discussions, also some debates over the years. This year, Digicel celebrated 20 years since we first launched our services in the Caribbean. 20 years ago, the governments and regulators of the region had a vision of a liberalized, competitive telecommunications market, and it has been a great privilege for us to participate in this. Today is also a time of radical change mainly because of technology, but also opportunity. The global digital economy is growing at breakneck speed, and it is vital that the Caribbean fully participates and also fully benefits from this. We need a common set of rules for the digital economy across the Caribbean to ensure that investments in networks can continue, society is protected from threats, and governments can maintain tax revenues as everything shifts online. I would like to spend the next few minutes sharing our thoughts with you about how we can take action as a Caribbean region. Starting with investment challenges. Operators face significant regulation in some of the smallest countries in the region. There is also a constant need for reinvestment in technology, from 2G to 3G to 4G to 5G, and of course, fiber. The absence of scale means that operators face significantly higher rollout costs, lower profitability, lower cash flow, and a reduced investment ability. In Digicel, we invest between 16 and 18% of our revenues annually in our networks. This is not sustainable, and I'm sure Flow, CTAR, TST, and other operators in the region face a similar challenge. We also compete with big tech OTTs who offer an array of telco services such as WhatsApp, calls, or video streaming apps who do not comply with regulations, and their abusive behavior cannot be challenged, nor do they pay license fees, USF, spectrum fees, sales tax. They all need to be licensed like the rest of us. We have been discussing this issue now for about 5 years, but it's coming to the point where we need to ask ourselves whether we want Silicon Valley big tech companies to be the providers of telecommunication services in the Caribbean by the end of the decade, or whether we want the companies that you know and trust and who will provide employment and pay tax in this region to continue. Online harm is a big issue. It's a major threat to society. We are all familiar with the growing list of scandals and abuses by Facebook and mounting evidence of big tech crushing small competitors, spreading hate speech, disinformation, and conspiracy theories. These are not issues that are happening in faraway places. The Caribbean people are being used to experiment. Cambridge Analytica developed their techniques to use Facebook to distort democratic elections in Trinidad and Tobago before applying these to the Brexit and Trump campaigns. When the EU introduced data protection rules for children, Facebook applied these immediately in the French West Indies, but did not bother to protect the children of other Caribbean nations. The Caribbean has witnessed an explosion in hate speech, ISIS terrorist content, and other harmful illegal content spread and amplified by OTT platforms. Only a couple of days, we saw Nicki Minaj spread a nonsense anti-vax conspiracy theory on social media that nearly undid all of the good work Caribbean governments and CARICOM are doing to promote COVID vaccines. Many countries have acted to introduce laws and regulations to protect society. Online harms are undermining the fabric of our society, and the Caribbean badly needs, in my mind, rules to protect against these also. Another important question facing Caribbean governments is how to fund public services as tax revenues decline because local businesses are being replaced by big tech. The big tech giants need to contribute to societies where they earn their profits and also their revenues. Loss of tax revenue affects the world unequally and affects the pace of digitization as well. Without investment, the Caribbean risks falling further behind developed regions. The World Economic Forum warns that this will lead to the digital exclusion of workers, bringing livelihood crisis and rising social tensions in the coming years. In parallel, giants such as Facebook and Google make vast profits from advertising in Caribbean countries without paying any taxes locally. It's just hard to believe how they have got away with it for so long. Yesterday, I attended the annual meeting of the UN Broadband Commission, and for the past 2 years have been involved in the working group studying financing plans for broadband in the 21st century. Out of a global population of 7 billion, it's hard to believe that 3.5 billion people do not have access to broadband at present, and stakeholders from Africa, Asia, and other countries around the globe have said enough is enough. The only way to finance the $450 billion needed to connect these people in rural parts of Africa and Asia and in South America and even in the Caribbean is for everyone who derives an economic benefit from these new broadband networks to contribute a portion of their revenues to fund network build-outs across these countries. This is the only way that broadband can be rolled out in some regions at affordable prices. An infrastructure fund, possibly under the auspices of the IFC or the World Bank, would finance a substantial portion of this $450 billion network rollout, and telcos, Facebook, Google, and others would have to give up a percentage of their revenues to reach these remote customers. It's a completely new way at looking at things. For example, Facebook has WhatsApp to compete with telecoms operators, and Facebook earns on average approximately between $2.40 and $2.50 per month per user with no infrastructure costs. And they have 2 billion customers. There are many useful examples of new laws in the European Union, the United Kingdom, and other countries that the Caribbean can now look to in order to identify the best possible way forward. As I mentioned earlier, a key problem we have in the Caribbean region is scale. We have different rules and regulations across the region, and countries with relatively small regulatory bodies with limited resources. This approach served the region well during the period of the liberalization of the telecommunications market, but we must recognize that this model is no longer adequate for the modern global digital economy. The digital economy is rapidly becoming the economy. Without a new approach in this region, every service imaginable, from food and grocery delivery to medical consultations to media to communications to transport and tourism, will in the future be provided by big tech platforms. There will be no local companies left to regulate. We need to ensure that the same rules apply in every Caribbean country. This can be achieved at Caribbean or CARICOM level by agreeing a set of principles based on the best international practice. Caribbean nations could then apply these principles by amending their local ICT laws. Big tech might try to pressurize individual Caribbean countries as it has in the past, but they cannot ignore the region if it acts in unity. We could ensure that regulators have the scale required to ensure that big tech giants follow local rules by sharing resources and by enhancing the role of the Caribbean Competition Commission. Looking at the laws in other jurisdictions, there are 7 important principles that the Caribbean can include in its legal framework. First, require the local legislation of big tech platforms above a certain threshold. South Korea now requires Google and Facebook to appoint a local representative for user complaints and to respond to regulatory inquiries. Second, make provisions of ICT law mandatory for big tech platforms. For example, a duty to cooperate with the police and a duty to file financial accounts with the regulator and details of traffic usage annually, as happened in South Korea. And of course, pay local taxes, including corporation taxes. Third, make it easier to request the identity of anonymous posters of hate speech and defamatory statements from big tech from local courts. Fourth, the competition law has emerged as a key tool enabling regulators to protect local consumers and entrepreneurs. The UK and the US based their approach to big tech on competition law. In Australia, how competition law was used to declare big tech dominant and prevent abuses in media markets. Caribbean countries should include competition law provisions in their ICT laws that apply to all providers of digital service, regardless of their location. Resources can be focused through the CARICOM Competition Commission to support regulators across the region. ICT laws must mandate that digital service to consumers are subject to local law. Platforms cannot be allowed to avoid local law by stating that their services are subject to the laws of California. 6, there needs to be a clear requirement that illegal content such as child abuse images, which are horrific in my mind, or terrorist content must be removed within a given time frame. A schedule of other prohibited harmful material could be agreed regionally and published by ministers. Big tech should have a duty to report illegal content to regulators and provide an annual transparency report setting out how they dealt with complaints, illegal and also harmful content. 7th, introduce credible and uniform penalties for non-compliance. The European Union has fines of up to 10% of turnover, plus daily fines for non-compliance. It's interesting to look at the Australian example. I also mentioned a moment ago that South Korea law has required big tech to register locally and to provide reports to regulators. Let me give you some more detail on the Australian example that I mentioned. In Australia, big tech giants were profiting from local news media content without paying for it. In other words, they were taking other companies' stories, etc., and not paying for it, threatening the extinction of local news media companies who bore the cost of producing news but were losing massive amounts of advertising revenue. The Australian Competition and Consumer Protection Commission used its competition law powers to establish that Facebook and Google were abusing their dominance in markets for digital advertising. Then in February 2021, Australia introduced a News Media and Digital Platforms Bargaining Act that obliges big tech giants to negotiate and agree commercial terms with local publishers and broadcasters for their use of their content. The big tech giants quickly complied, and Australian newspaper and media companies are now getting paid by big tech giants for their content. A similar system has been set up in France. Google has established a $1 billion fund to pay for content it uses in these countries. At present, regulators in the Caribbean cannot act to help local media as they do not have competition law powers. There will be huge ramifications for democracy in the Caribbean if the newspaper and radio and television industries die because citizens will be relying for Facebook for their news. Turning to taxes and returning to the question of taxes, the G7 big tech tax proposals will mainly benefit wealthy countries. Emerging markets are more vulnerable to the tax avoidance strategies of big tech giants. A recent report on taxing the digital economy proposes that emerging countries should apply digital taxes to big tech to make up for the difference in their tax contributions. Now, big tech will argue that the answer is to charge VAT on advertising, which was put forward by Facebook at a recent meeting of the UN Broadband Commission. But, I don't think anybody falls for this. VAT is actually paid by the buyer of this advertising services and is not a big tech tax as such. And they must be required, in my mind, to fess up and declare to national governments what revenues and what profits they are making in every country in the Caribbean. It will quickly become clear that they have few costs, but make extraordinary profits. They pay no taxes in contrast to operators like Digicel, Flow, TSTT, Setar, and others who pay taxes and fees averaging about 30% of revenues. Many jurisdictions have decided to take action to impose digital taxes on revenues earned locally. In January 2021, Kenya introduced a tax of 1.5% on all digital service, regardless of where a company is based. Even in the United States now, a number of states have introduced digital taxes, particularly states like Maryland, West Virginia, Texas, Connecticut. I believe that the Caribbean should follow these examples and use a portion of additional tax revenue to fund regulation and future infrastructure. In conclusion, the Caribbean is too small to take action to protect itself, and there are examples from other countries now that are helpful. We can create a true CARICOM ICT space by agreeing key principles, including these into national ICT laws. Facebook and other big tech platforms are all in the ITU, trying to block and delay processes, including the report that I spoke about on 21st century financing, which we approved yesterday. And it is something that we need to make sure doesn't happen in the Caribbean. Australia, the UK, South Korea have all led the way. We can look to these examples and we do not need to reinvent the wheel. Digicel is very willing, as I'm sure a number of operators are, to help, and I propose that we establish a working group of ministers, regulators, and operators from this region to draft the legal amendments that are required. Thank you once again for affording me this opportunity to address your meeting, and I wish you the best of luck and continued success of the CTU. Thank you.